get these off for you because I can put them on. The dollar index is looking technically to come lower because of the stochastics. It's the only reason I am saying this. However, I'm looking at the market building a base. Now we know that base building takes much longer than a top. It does. And what happens when you go into a base is that markets become oversold and overbought very, very quickly, but don't mean anything because they're within this sideways motion, this sideways pattern. So on the downside, you have got the 9-day moving average coming in at 90.57, the 21-day moving average coming in a little bit higher at 90.63, the 55-day moving average coming in at 90.42, and the 23.6 fib coming in at 90.38. So you've got a lot of support on the downside, and this up and down and up and down and up and down we see really is conducive to this base building type of market. We don't like them, but we look at them because we think, do you know what? It's base building. Now, obviously, when you see a pattern like this, it can be a continuation pattern, but this has gone on now. It started at the end of last year, okay? So we started around December last year, and we're now in March. So for 4 months, we've been stuck in this consolidation phase. Continuation patterns are normally a lot quicker. They really are. So they make this and then they go in the direction of the original trend. So this could have quite happily been a continuation pattern and then down. But we didn't do that. And because we didn't do that, you have to then focus your mind on, right, well, continuation patterns take a week, weeks, but base patterns don't. They can take months. So we're nearly 4 months in to this consolidation phase. So that makes me think maybe we're in a base pattern. Now, these are, I'd say they're easy to trade. They're not, because you're in the mindset of dollar lower. It's very hard for you to flip to dollar strength. So, you know, not only are you fighting technicals, you're fighting against market sentiment. You're fighting against psychology of the market, and you don't want to be doing that. So we'll take a look and see what the euro is actually doing against the other currencies. Euro sterling beginning to turn negative off of neutral indicators. I don't like euro sterling, so I'm thinking, you know, we got to the 38.2, that cuddled the 21-day moving average. It also had a resistance from previous support. We couldn't break above the 50% fib, and we only touched 38.2 because of the spike in the euro. But overall, euro sterling wants to go down, and we have to understand that and place our trading accordingly. So now we're going to have a look at Euro Swiss. I wish we hadn't looked at Euro Swiss, but Euro Swiss, you can see, has double topped around the 110.99 area. We're trading at 110.90. Yesterday we had a good close, but we couldn't take out that high. We couldn't. And what can't go up goes down. We are extremely overbought on the Stochastics, we are at 93%. The red line is at 84%. It'll be much better if the red line got above 90, then we started to turn. If you're going to trade Euro Swiss, you need to be extremely careful, because if you're not extremely careful, then you can get really badly burned. My little thing for trading is doubles hold, triples rarely do. So if the Euro Swiss makes the break and stays above 111.15 for 2 consecutive closing prices, that is your key that the Euro Swiss is going to go up. Now remember, and please remember this, the Euro Swiss was held by the Swiss National Bank on the downside at 120 for many, many years. It was only in 2015 the SNB come out and said, do you know what? We're not supporting the Euro Swiss anymore, and it plunged 16,000 points in one day. So when you think that the Euro Swiss is high, get it into relative terms of where the Euro Swiss has come from. And remember, 120 was the low for many years. It's a little point, just a little point to remember. EuroCAD. Yeah, I like trading the EuroCAD. Alright, now that's trading at 152.35 at the moment. Where is the resistance for that? You look at your moving averages, you've got the 9-day at 152.81. Now the last 3, I'm including today at the moment, so 3 times that's held. So if that goes above 153, you've got more on the top side at 153.19. You've got this trend line coming in, and that's coming in today at 153.77. So you've got a big chunk of potential profits if this takes out 153.20 or 25. You know, if it does, go with it. It should then go to that trend line, or at least the trend line, but could potentially go, you know, up here 153.86, and this up here at 154.42. You've got your 55-day coming in at 154.49. So happy days. Now, if it doesn't break up and it takes out this low here, and that low is at 152.01, where are we going to go? Where is the obvious area that that will go to? This. All around here. Okay? And that's 150.54. So, round figuritis, 150. Remember, our traders are not, and they don't want to be, you know, rocket scientists. What they do is they look for the next magnetic level that will entice prices lower. And that is all we do. You know, we do not run mathematical calculations. I mean, obviously, there are more and more now these people that run signals, and a signal will tell you to do blah 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 and blah blah blah. Do you know what? But price action will tell you that anyway. If you have the eye of a trader, not the eye of a tiger, but the eye of a trader, you can see where the market will magnetically be pulled towards. You know, people make trading too much too much hard. They don't keep it simple, and it really is. You need to keep it simple. So the last one I'm going to look at is the euro yen. Not one I love particularly, got to tell you, not one I'm You know, I trade a lot. It isn't. But if you look at the euro yen, currently we're trading at 129.17. We've stopped here yesterday at 129.45, 129.52, and this one, 129.97. If I move this chart out, you've got this at 130.59. So if we take out this high at 129.97, that is where the market will try for. So you have nearly over a point of potential profit if you go in at a strategic level. So even if you go in at 130.25 or 130.15, you are still going to get quite a good bit of profit from your trade. And that is what we're all about. Well, that is what I'm all about. Okay, I don't care how I get there. I don't need to come out with big long words or particular candlestick patterns or write a book or do anything like that. I'm not in it for that. I'm in it for making the money. I'm in it because of my love for trading. That's it. Nothing else. That's what I'm all about. And I'm all about also that no one needs really to be able to blow up their account if they do it the right way and don't get suckered in by following people who, one, have never traded on the live floor, and two, have never traded in a bank and yet can spout about foreign exchange. They've never done it, but they can talk about it, and they can talk about it very well. I mean, it's different with me. I've got 39 years experience. I can say, no, that isn't how it happens. But if you're new and you're starting off, it could be a real danger. So you want to keep what you do to the most basic and simplest terms. And then hopefully you won't be in that 89% that fail constantly and have failed for 15 years. Right, that's enough of me. Good luck. I will catch you all on the desk later.